Good evening everyone, hope you're well and welcome back to another weekly outlook video. So in this video we are going to be breaking down the dollar, gold, oil, GA and Euro JPY. Just before we get into that, we will look at the economic calendar, see if there are any high impact events this week which may affect the market. We do this just simply to know if we need to avoid the market at any points. Just to be aware, for example, GDP on Wednesday, we might want to be careful and monitor the dollar, monitor gold, just to see if that news can affect it. So looking overall at the week, in all honesty, it looks like it's going to be quite a slow week for the market. Monday, we don't have much at all, just the durable goods for the US dollar. We'll keep an eye on that. A speech on Tuesday, which again, you don't know what's going to be said in the speech until it's said, so it's not something that you can really monitor in terms of figures like the consensus in the previous. Overnight on Tuesday, so early Wednesday morning, we have retail sales for the Australian dollar. I just mentioned then, GDP as well at 1:30. There's then a Powell speech at 2, and then a few speeches for the euro and also the pound. So that will be an interesting day. Going into Thursday at 7 a.m, we have the GDP for the pound, so something to keep an eye on. And then on the Friday, we have the PMI for the manufacturing for the US dollar at 3 p.m. So that's about it. Not much that should move the market too much, but we will see what happens as the week does progress. So now let's go on to the charts. Let's look at the DXY, or the dollar, to start with. At the minute, it looks like the dollar is pretty much just ranging. Last week, we did predict this move from this area here at about 104 up to the 104.8 region. So well done if you managed to catch some trades based around dollar strength. Just now looking at the dollar though, to me it does look like it's ranging. So what I will be looking to see and pay attention to is if the dollar can break this low, or if the dollar can break this high here or this level. I would expect to potentially see dollar continue to push up until the 105.5 region. If the dollar can break these lows at 103.9, call it, I would expect to see some dollar weakness up until it fills this low here at 103.4. So nothing in terms of break and retest and stuff like that. Obviously, if price does manage to break out, you may see a limited reaction here and a break and retest and a go. Likewise here, if dollar can break out, you may see a pullback into the level, test this area, which obviously has been used as a key level in the past, and then looking for the dollar to continue and fill this wick here. So it would just be a case of monitoring these levels. You can see this upper level here. It's being used as resistance, support. This was a breakout and break back in. And then resistance, resistance. That's a good level. This level here, you've had resistance. Spiked out, obviously come back in. Resistance. And then support, support, support. So it'll be interesting to see what the dollar does. Right now, it's currently in a range. So if you are looking to use the DXY as confluence for other trades, I'd maybe just wait and see how it opens on the week and see if we can break these levels. But I feel like that's pretty solid analysis for the dollar going into next week. Next up, let's have a look at gold. So gold last week, you can see by these two daily candles, we had a huge spike down. We did actually catch this trade in the analysis group. Price then wicked back up and we took the win. And then likewise here, we also got a win on this wick here. So two good trades for gold, but looking at it from a structural perspective, you can see that there's not real movement in the market. We saw this obviously slam a week or so ago, but now looking at gold, I would want to see gold break below this level here at about 1822, just because you can see we've had resistance here. Price messed about in and around here, and then we've had support, support, and then support. We then didn't get a close below the level. You can see it wicked out, wicked back in. So if we can get a close below this level here, I would expect to see gold continue pushing and potentially go down to 1808. Now, it could happen in one move, or what could potentially happen, like we've seen with the dollar in that previous example, we could either get a slam down, or what we could do is get a retest of the area before a push down. And that does, to be fair, look like a decent enough move. Probably about a $15 move. So if you manage to catch that going into next week, then I would say you're in a good spot. In terms of long bias, I can't really see, looking at this, any areas where I may be happy to go long on gold currently. If price did obviously break above this area here, we could maybe expect a retest before a further push up. However, in terms of just purely looking at structure now, I would probably be short bias on gold. You can see as of right now we are in this almost little channel. If we do, and I don't really like to use trend lines, but if we do look at what's happening with gold, you can see it's currently being squeezed like so. So potentially, obviously, gold may just continue to range and kind of move down until this area here before price either decides to break to the upside or the downside. But just based on pure key levels and structure, I would probably say to just keep an eye on this 1822 area here and maybe use that as a bias for next week. If price does continue to pump up and push, then fair play, we can adapt with that when it happens. Obviously, our members in the analysis group will continue to get 4-hour gold trades and analysis through the week. But as of right now, when the market is closed, this is what I would be looking at with gold. In terms of stops and stuff like that, what you could maybe do is if price broke below and did retest this, and let me use the right position, you could maybe look to put your stops above this structure point here and obviously target the lows if you wanted there for like a 1.5. So I'll keep this on. Obviously, you want to see what happens and if you get a retest, but that could potentially be a good play just based on the 4-hour. Let's have a look at oil. So if you watched last week's video, you will see with oil, we did predict this move here for a 6-to-1 risk to reward ratio. We did say that if price came back to this area here, we would get a retest. If we look closely, you can see price tapped entry and then obviously it worked. So if you are new to these videos, just know that the analysis is obviously here to work. It's not just for the sake of a video. These trades do actually like to play out. So structurally, if we're looking at oil, you can currently see that price is rejecting this area here at about 108.5. So just from a structural perspective, if we can get a push further up and a break above this level, we could maybe look to see a retest of this area. So what we could maybe do is say if price gets to this area here, we could get a short down back into this retest area before price continues up and maybe fills this high here. Now, this is purely technical. Obviously, we know fundamentally things can happen with oil very, very quick. But just from a structural perspective, I think if gold can push up to the 111 region, and what I'm going to do is, if I put this here, you could maybe look at something like this. So you could look to maybe short from here, from a 1.9 risk to reward, just based on structure. And then what you could maybe do then is long from here back up to this high. Now, if you know about our previous videos, how to roll runners and stuff like that, this could maybe be a good place to get a runner. So you could use the profits from this trade to roll into this trade, which then would push up. If that does in fact happen, that will be a really nice move. So you can see, and once again, I don't really like using trend lines, but you can kind of see that price is making this upper channel here. If we want to, for example, say price broke out of this little channel, retesting it. The way I like to look at it though, to make it simple, is that you can see structurally, this is a new lower high within the market. It's almost double bottomed, just from a structure perspective. If we can get a break and retest of this structure, but also obviously from a retest of this high, or low, sorry, then that should be a very good trade to have. And then maybe, you know, obviously this could be your first target, final targets could be up here or something like that, but just see how it works. But to me, this does actually look like some really good analysis. Let me just quickly draw a fib on the chart and see if we have any other confluence. So yeah, even better. Looking at this here, from the start of the move up here to the push down, you also have a 38 Fibonacci in and around this level. So to me, that would make a good trade. So to be fair, these are two trades I would be happy taking going into next week. But obviously just see how the market opens and if there's any new fundamental development throughout the week. So that should be a good trade. Going on to GA, let's have a look. So once again, this is a new pair for the weekly analysis. I want people to, if possible, if you do want to see different pairs, then it would be appreciated if you could put them in the comments. Just because obviously there's that many different pairs. We can do new pairs every week. We can do pairs you want to trade. So if there is actually a pair out there that you're trading which you think, you know what, maybe I would like some analysis on that, then put it in the comments and we will be more than happy to help. So this is GA now. You can see overall price came back to retest this structure at 178 and did actually fall away. So with this, 178 is holding as a really good level. However, you can see price towards the back end of last week did actually start to fall. Structurally, you can see obviously you've had loads of support areas here, then resistance, resistance, resistance. So just from a key level standpoint, you could maybe expect price to, going into next week, push off this area here. The tricky thing is that market close was about 20-30 pips from this area. So regarding gaps and stuff like that, you need to really see how the market is going to open. So realistically, we could maybe see a reaction off this level here, and then maybe trade it up to the highs. Let's just see if we do have any Fibonacci's in play for this. So looking at this structurally, I think potentially going into next week, you've got quite a few tradable opportunities here on GA. They would all be long bias, just simply because price has already fallen away from the 178. So in my opinion, looking at this, you have the 38 fib and a key level here. You've got the 50 fib and a key level here, and a 61 fib and a key level here. The reason these are all key levels is there have been support and resistance multiple times throughout the market. So for that reason, they would make for a good potential trade. All these trades have a Fibonacci as well as added confluence. So these are areas which I would be confident in. I'm not going to draw a risk to reward box on this just because the market is close. But maybe what you could expect to see from this area here is if we just have a look structurally, if we're targeting obviously like 50 pips, you could maybe look to have a 30 pip stop there. Looking at the 61, once again targeting the next key level as your first target, 50 pips, then maybe what you could do is once again have a 30 pip stop here. So they are maybe two opportunities here, a 1.8 and a 1.6 risk to reward. Like I said, this idea could work, but it just depends what happens with the market and how it opens. So what I'll do, I'll just keep these boxes on for now, and that's GA. Finally, let's look at Euro JPY. Once again, a new pair for the weekly outlooks. Just want to basically show you some pairs and just structurally go over things. So if I am now looking at this pair, what am I seeing? Well, I can see price has continuously rejected this level pretty much a few times now. It made a double top. We are now getting the retest of that double top here. So potentially what we could expect to see is, if I do this right, potentially what we could expect to see is a further push down from this area. The only problem is that the market closed here. So now we are at risk of gaps and stuff like that. So I would probably wait to see what happens, but throughout the week we could maybe see price pull back from this area here. Looks like a 50 Fibonacci, yep, so about the 50 fib looks to have done its job. So yeah, that's the short bias. Let's have a look at longs and just see what's going on. No real Fibonacci confluence here for this move. let me just have a look from this perspective here, from the lows. So if we have a look here, let's see, once again, so these are the Fibonacci levels here. Maybe what you could potentially see is a move from this low here, so 138 area. What you could potentially look to do is have a long, target the next key level, so the next area of supports here, 140 pips. Stop loss could be in the range of, let's just have a look, I'd probably say due to the target, let's say 50 pips, and that could be a good area. Now, I don't want to draw a risk to reward box on this because obviously the market might gap open, etc. Just wait to see what happens on market open, and then maybe you'll have a good trade. But this here on the 61 at 138 does actually look like quite a good trade. So for that reason, I would be confident to take that setup for pretty much a 3 risk to reward, and that's what I'd do. So that is pretty much all the pairs, guys. If you've made it this far, thank you very much for watching. If you are interested in joining the analysis group and just seeing the analysis throughout the week and some trade ideas that we will be taking as well, link will be in the bio for that. But yes, guys, thank you very much for watching this video, and we will see you in the next one.